In this video, traders, we're going to look at a simple market reversal strategy. Powerful one, this. Stay tuned. Hey guys, warm welcome to you. All right, so this video is sponsored and it's a good platform. So go and check it out, open a demo account, have a look around, see if they're the right broker for you. Okay, so I want to talk about simple market reversal strategy. So whether you're trading currencies, commodities, indices, stocks, whatever it may be, this is quite a nice tool to have in your toolbox for when you're getting these kind of multi-legs lower. Now, I'm going to talk it from a perspective of an index or a stock with a specific opening and close time, but it will work for Forex as well. You just have to be aware that the time of day has to be relative to the session. So if it's a London session, US session, Asian session, for example, if you're splitting up your currency pair, that's what we're looking at when we're talking about the open. We'll cover that in a moment. So really what we're looking for is to get long on a move lower, but we don't want to dive in, right? Because if we dive into a trade too soon, we're going to get hammered and hammered. And how many times have you dived into a trade way too early, market's gone further than you expected, finally reversed, and you've been caught out? So we've got a few rules that we look at before we get into the trade. The first thing is that we always look for a three-leg move. So the first leg driving lower, second leg driving lower, third leg. Now this is a daily chart. Let's assume this is a daily chart. This is what we're looking for. You know, like a week or so, maybe a week of consolidation under the first leg, and then a final move low. What we don't want to be doing is starting to look for market reversals on the first leg or second leg, with a little caveat that in a very, very strong market, let's say this market's been pushing up, and it's just starting to pull this down a little bit, then maybe the second leg might be or the third leg might be kind of a little blip as opposed to a good drive. But normally what we're looking for is this first leg, consolidation. And by the way, what counts as a leg is a kind of consolidation or a pullback to the mean or something like that. Second leg, third leg, drive lower. Now this is the zone that we're kind of interested in. And what this does is it initially stops us diving in too soon. And also what it helps is it helps you mentally, because you go, okay, well, I'm waiting for my third leg before I even pull the trigger on, before I consider pulling a trigger on this. So third leg coming down. Now we want some decent moves here. 3 solid days is nice. And we want to be kind of in fresh territory where you just feel everyone's out. There's no one here buying anymore. It's done. And we want a fresh low. So this is the kind of the criteria. Fresh low, good volume. Obviously trading FX is an approximation on volume. If we're trading index, we can see a good volume. So you want a real kind of a good move. Now this is not necessarily an exhaustion type move, but it's good volume, good flow, to indicate that there's a, if you think about a pile of people on the sidelines to sell, the more volume there is, the more of those people have now executed what they need to do, especially when we're in the third leg. Now it's different, and we'll talk about volume, we talk about volume in other videos, and I'll probably do another one soon, so make sure you subscribe, guys, if you like this kind of stuff. We'll talk about the relationship with volume in the first leg. It's slightly different, but in the third leg, we can look at it as possibly a reversal type pattern or signal for a potential reversal. So the best thing now that we can do, or the best setup that I've found works the best for me, and guys, you know, test these style stuff, look for yourself, have a look in the markets you try to trade and see, but it's after you've had the third leg lower, we look for an early day or early in the day move lower. So if you think about an index, for example, S&P 500, NASDAQ, DAX, whatever it may be, as the market opens, we want to see that drive lower early in the morning. We don't want to take any reversals that happen when you get the drive lower in the evening. And it's the same with currencies. You know, if we've got a US session, we want to see that drive early in the US session. We've got an Asian session, that drive. Now, up to you how you work it out over the 3 sessions, but you really want an early drive, so to speak. So early in the day move lower, kind of indicating a bit of urgency, a bit of selling at the open, a bit of driving, and then the morning low holds. So what we're kind of looking for, if I can jot this down briefly here, guys, is we are looking for this type of move. Pulls up, and then we find some support above the low. So the morning drive goes lower, we push up, that doesn't get retested after the morning, but more importantly, we find support above the low. What we don't want is for it to find support at the low. You know, that's no good. That's almost a bare flag that there's some weakness. We want to see the low come in, early morning low, drive off that low, and then find some support higher. Preferably above the midpoint, even better if it's above the open, something like that. So you've now got a nice overall package to get into the trade. You've got 3 legs lower, you've got the early morning drive, you've got good volume, you've seen some evidence of buying or at least a back off in selling and some support holding, which indicate there's some buyers there. And it gives you a good risk reward ratio, because now of course you're going to put your stop under that morning low and you're going to ride it and you look for a close at highs on the day. And if you get a close at highs on that day, maybe you're going to push it up and your first target's probably going to be that prior support level there. And if you're looking for a full reversal, you're probably going to look for a break of this trend line here, and then you can start to add and get aggressive, maybe looking for a revisit to highs. That's a nice powerful strategy, guys. The importance is that you've got to get that early morning move. If it's in the afternoon, don't touch it regardless of how good this looks. And then of course intraday stop under that low. Another thing is, if you're holding overnight looking for a swing trade on this is the beauty of this trade. Your stop is like an intraday stop, but the target's are multiple days. Risk reward ratio is very high on this one. The thing is, if it doesn't close decently high, you don't see the evidence of reversal on the day you take the trade, consider cutting it, consider trimming it. Now, slightly different maybe if you're in Forex market, because obviously you've got 24/5, you can mitigate your risk overnight. But if you're trading a stock, for example, or something where you give up the risk because the market's closed, you might want to consider trimming some off. Anyway, guys, whatever you're trading, do check, and there's a link to them in the description below. Have a look at their account, have a look at their website, or maybe open a demo account, see if they're right for you, and make sure you're subscribed for more videos. Take care, keep your risk managed, guys. Bye-bye.